Imagine buying your first home with a tax-free down payment. Sounds too good to be true? Well, in Canada, it's not only possible, it's already happening since April 2023. Hey everyone, welcome back to my channel where we help Canadians save smarter, invest better, and achieve their financial goals, even though you're new to Canada. Today, we'll deep dive into the newest and the most powerful investment account for first-time house buyers in Canada, which is FHSA or First Home Savings Account. Is it a right account for you? Let's break it down together, quick, simple, and with example you can actually use, not a random ones. As of early 2025, nearly 1 million Canadians have already opened FHSA for their first home. That's around 1 of 40 Canadians taking a proactive steps towards home ownership. What is an FHSA? The FHSA was first launched in April 2023 and it's designed specifically to help Canadians save for their first home. And no, despite the name, it's not just a savings account. Think it more like an investment account where you can buy stock, bond, ETFs, grow money tax-free. So while TFSA and RRSP are amazing, the FHSA takes the best of both and puts them into one powerful tool. Let's take an example. Meet Phil and Claire. They both earn between $70,000 to $100,000 annually and decide to maximize their FHSA contribution. By saving $8,000 each year, they each receive an approximate $1,640 in federal tax savings over annually, and over 5 years it is $18,000 approximate, and nearly $8,000 in provincial taxes, with a combination that's around $90,000, which includes investment returns. And they can use that towards a 15% down payment of a $600,000. And when they file their taxes for purchasing them, they receive an additional $1,500 federal tax relief to first home buyers tax credit. So who can open it? There are 3 categories for you to open it. One is you have to be in Canada, which means that you have to be a Canadian resident upon it. Second is you need to be 18 years or older, 19 in some provinces. Third is be a first-time house buyers, meaning you haven't lived in home you owned in the current years or in the past calendar 4 years. Bonus, if you own a rental property but you don't live in it, you will still be able to qualify. Anyways, let's talk about the contribution limit. The FHSA lets you contribute $8,000 per year per head with a lifetime maximum of $40,000. If you don't max out 1 year, don't worry. Your unused room gets carried forward. But the only thing is when you open the account. So even if you have not opened an account or you don't want to do a contribution, open the account ASAP. Now let's talk about the benefit, and trust me, they are really good. First is tax sheltered growth. Just like TFSA, your investment grows tax free. No capital gain tax, no tax on dividend, more dollars in your pocket. The second is tax deduction on contribution. Just like RRSP, whenever you put your money, it can get deducted from your income. That means you pay less tax and possibly even get a refund. The third is tax-free withdrawal. If the money is used to buy your first home, you can withdraw it tax-free. That's right, tax-free in, tax-free out. But it must be qualified withdrawal. So follow the rules. Okay, what if you change the plan and you don't want to buy a home? No worries. You can roll the money into RRSP or RRIF tax-free. And that's a kicker. It does not take the RRSP though. That's an essential bonus from the government and especially for you. Just remember, always do a direct transfer, not a withdrawal. Don't take the money out and put it in. You can keep the FHSA open for 15 years or until you turn 71 or you make the first purchase of your house, whichever comes first. Now, let's talk about some common pitfalls a lot of people go through, even my friends. First is missing contribution deadline. Contribution must be made before December 31st to maximize the deduction for that current year. Second is poor contributing. The annual contribution limit is $8,000. Exceeding this can lead to penalties. Third, not understanding carry forward. Unused contribution room can be carried forward, but it's essential to track it accurately, otherwise you will have some penalties. Fourth, ignoring investment options. FHSA can hold various investments. Not utilizing that to its limit will potentially harm you. Fifth is not contributing to home buyers plan. You can use both FHSA and a home buyers plan, but ensure you meet all contributions and the conditions. In my opinion, FHSA is a no-brainer. If you're eligible, just open it. Why? You save for your first home because it's expensive nowadays. Second, you grow your money tax-free like TFSA. Third, you get tax deduction like RRSP. And fourth, if you plan change, you can roll over to RRSP and still keep the benefits. Let me know if you have any comments in the section below. If you have any questions, if you have opened an FHSA account yet or still planning to, if you have questions, I'll be more than happy to help you out. Don't forget to like, subscribe and share to these videos to your friends and families. Thank you so much for watching. Hope you guys are enjoying. Have a great day. Bye-bye.